So let's turn to Chris Gaffney for his market analysis. He joins us, and he's senior market strategist with EverBank. Welcome, Chris. Nice to have you here.
Well, thank you.
We posed the question at the start of the show is whether or not this correction is over after such a rocky start to the new year. What do you think?
We think it is over. We certainly had a rocky start to the new year, but since hitting their bottoms, stocks have recovered. And as Tyler stated in the beginning of the show, we're back to levels that were pretty much at the beginning of the year. So we do think it's over.
What changed, Chris?
Well, I think sentiment changed. The drop was mainly due to fear. We had an emerging markets crisis. A couple emerging market countries had currency crisis. And then we had a slowdown in China. And the combination of those two created a lot of fear and negative sentiment. And I think the market was really primed for a pullback. So we got what we wanted. And I think we're establishing a base to move higher now.
Yet, on the other hand, we've seen a number of the big houses on Wall Street cut their GDP estimates because of the bad weather that we've had. What's your sense of the economy as a whole, and whether or not this recent spate of bad weather might derail the economic recovery and, to a certain extent, the recovery on Wall Street?
Sure. I think that going into 2014, many investors and many of the investment houses had a exaggerated expectation of what the 2014 would bring as far as the U.S. economic recovery. Recent data has certainly brought us back to reality. We think that you're going to see continued slow growth here in the U.S., but it is going to be growth, and we will see some volatility. As far as the markets, we do think that we'll see some volatility continue and some pullbacks. As we have seen, this probably won't be the last of 2014, but we are looking better now.
How would you deploy your money? Let's say you had $100,000 worth of incremental cash that you wanted to put to work. How would you apportion it sort of between stocks, bonds, precious metals, real estate, and so forth?
Well, diversification is the key. At EverBank Wealth Management, we always have well-diversified portfolios. And in fact, we have pretty good positions in both currencies and commodities. And these are more defensive positions, if you will. But we like to have a very diversified portfolio across all asset classes that are non-correlated, so that when the market goes down, you've got other parts of your portfolio that are moving up.
What worries you about the market, if anything at all?
Well, I think the weather, as you pointed out earlier, Sue, is a worry. I think it's going to be a drag on the U.S. economy during the first quarter. While earnings in the last quarter of 2014 came in basically positive, we saw a lot of negative forward guidance. So I do think that we will see the weather impact GDP in the first quarter. But, you know, what can you do about the weather?
Very quickly, are your positions in some of those non-traditional asset classes like currencies, like commodities, relatively higher right now than they would typically be? Very quickly.
No, we keep a fairly stable asset class diversification. So we bought some more into precious metals at the end of last year with the big drop that we saw there. So we did reallocate a little bit, but they're fairly typical.
All right, Chris, thanks so much for joining us. Chris Gaffney, senior market strategist with EverBank. Have a great long weekend.
Well, thank you.
Bye.